Hey, it's Tom here and welcome back to the channel. And yes, it is still me. I've had a bit of a shave, but the beard will be back. Just give it some time. Now, the topic for today's video is cloning. And cloning in an investment context at least is a very powerful mental model that I really first came across from Monish Pabrai. Now, Monish Pabrai often calls himself the shameless cloner. He clones many of the great investors, not only in terms of looking at the companies that they might be invested in, but also in terms of how he has structured his life. So, he's copied many things from Warren Buffett, for example, in terms of running a clear calendar, having an open schedule with not a lot of time dedicated to anything in particular, just a lot of time to kind of sit and think. And he's also structured his investment partnership, Pabrai funds, around the 1950s Buffett partnerships with a 6% high watermark in terms of returns, no management fee, and then taking a quarter of any returns over and above 6% annually. Yeah? And I think cloning can give you a massive head start when it comes to investing. If I look at my own portfolio, a lot of the investments that sit in that portfolio today are clones, or at least the ideas originally came from other investors that I really admire and have followed for a long time. Now, admittedly, there are things in my portfolio that aren't clones that I've come across myself, or I've come across from maybe even less well-known investors to initially get those ideas. But cloning is a very powerful mental model, and Monish Pabrai describes it a little bit like going temp and bowling with the rails up, giving yourself an immediate advantage over the average market participant. And in 2008, there was actually a study that came out around this exact topic of cloning the great investors. And it was a study called Imitation is the Sincerest Form of Flattery, came out in 2008. And it basically looked at what sort of investment returns would you have gotten if you had just copied Warren Buffett. Now, in the US, we have access to these 13F filings for big investors, which basically tell us what they own each and every quarter. They're on a 90-day delay, but nonetheless, they give us some really good insights as to what big investors are buying or selling in any given quarter. And if you had taken that 90-day delay 13F information and just bought what Buffett was buying, even if you'd bought at the worst possible price or the highest price during that quarter, and even if you'd sold out of stuff at the worst possible price, at the lowest price throughout that quarter, you still would have had a phenomenal track record. You would have, in fact, beaten the market by about 11% per year. Now, through the period of time that the study was looking at, the S&P 500 or the market itself did about 12% per year. So if you're already doing 12% from the S&P 500 and you beat that by 11%, you're cranking out well north of 20% a year compound returns by copying the world's best investor, in this case Warren Buffett. Now, it's really no surprise that when we look back at an investor with a great track record, cloning their ideas would have allowed you to also get a great track record. So when it comes to cloning, I think it's really about trying to identify who are the great investors and being quite selective in terms of the people that you actually clone ideas from. So for me, I have a series on this channel every quarter where I go through 13F filings. And when it comes to picking the right investors to clone, I think there's a couple of key things that I like to look at. Now, firstly, I have to find an investor whose investment philosophy I understand and largely is similar to mine. So that really wildly narrows down the world of great investors. Now, we basically get down to investors that have sort of a value framework. They're trying to buy businesses for less than they're fundamentally worth. And they also tend to have a small number of stocks in their portfolio. So in most cases, the investors that I'm following tend to have north of 50% of their portfolio probably in their best 4 or 5 ideas and their 4 or 5 largest investments. So on that list, I'm following people like, of course, Warren Buffett, Charlie Munger, Monish Pabrai, the shameless cloner himself, Guy Spear, Lee Lu, Bill Miller, Cliff Sosin, Norbert Liu. There's a handful of others, but these are all kind of people that I have followed through the 13F series on the channel over time. And these are people that have really guided my own sort of funnel of investment ideas to study and potentially invest in myself. And those aren't the only reasons that I pick that group of investors. Yes, they have a philosophy that aligns pretty well to my own when it comes to making investments, but they also have 13Fs that are relatively simple to interpret. And by that I mean most of these investors are not shorting stocks, they're just buying stocks, straight up, buying them long only. They intend to hold the shares for a long period of time. So anytime we see a big change in a 13F, we can really expect most of these investors to hold those shares for a long period of time. It's not some sort of short-term trade where the 90-day delay in the 13F filings is really going to impact us being able to copy them getting in and out of investments. If we copy someone like Warren Buffett or Monish Pabrai, they tend to hold stocks for a very long period of time. So if some new position turns up in their portfolio, we can have much more conviction cloning that idea than perhaps someone like a Michael Burry, who has a 13F come out every quarter as well. But there's typically a huge amount of changes and a massive percentage of the portfolio turning over every quarter. So if we were to try and copy Michael Burry, sure, we could copy the ideas as soon as the 13Fs come out. But he's making changes so frequently that 90-day delay for these 13F filings can really cause us to be quite out of sync with probably what Michael Burry's real portfolio is doing at any point in time. And 13Fs don't tell us the full story either. So yes, they're on the 90-day delay, but they also don't show us, for example, how much of the portfolio that particular investor has in cash. It doesn't show us whether they're shorting stocks. It, generally speaking, doesn't show us whether they have international positions or options positions. So that's where sort of another resource that I've been using recently comes into its own. Now, I've been using a website called ticker.com. I don't have any sponsorship or affiliation with them, but they have been quite useful in terms of slightly expanding the universe from the 13Fs. Ticker basically picks up any sort of regulatory filing. So a 13F is, of course, a US filing, but if an investor buys up, say, 5% of the shares outstanding of a Japanese company, in Japan, that will trigger a 5% ownership filing, and those sorts of filings show up in Ticker. So it's not going to capture everything, but particularly for larger investors that tend to buy heavily into a handful of companies, that can be a really useful resource as well. Now, in practical terms, when it comes to seeing these investments go into an investor's portfolio and then trying to transfer them to my own portfolio, I think there's a couple of key things to keep in mind, and there's a couple of different ways that you can really approach this. Now, the first way, I think, is to be what I would describe as a shameless cloner, or what Monish Pabrai would describe as a shameless cloner. Basically, just kind of mechanically cloning everything that comes into the portfolio for maybe a couple of investors that you really like. Not necessarily doing deep research on those companies, but just saying, if it's good enough for Charlie Munger, if it's good enough for Monish Pabrai, it's probably good enough for me, and slotting that into the portfolio. So that is one way to approach it. The way that I tend to approach it is a little bit more kind of selective cloning, I guess is a good way to describe it, where I'm not necessarily just blindly cloning the ideas that come in from other investors. Rather, I'm using that as sort of a funnel of new ideas for me to look at, and then if anything looks interesting and I can get my head around what I think the thesis is for that particular investment, and the price hasn't moved a whole lot since that particular investor that I'm looking to clone has bought it, that's a situation where I would then tend to maybe put a couple of those ideas into my portfolio. Now, there's a couple of key reasons why I tend to be more of a selective cloner than a shameless cloner. The first thing is I naturally tend to like being a little more concentrated in my portfolio. So if I had 20 or 30 different stocks in there, I really would find it quite hard to keep up with what each of those individual companies are doing. There's only so many hours in the day. I have a day job, I'm trying to keep the YouTube channel going, and I have a bunch of other stuff going on in my life as well. So you can only keep up with so many companies, and for that reason I tend to be a little bit more concentrated. And also I try to be kind of a harsh grader. I try to not let everything that looks kind of okay as an investment into my portfolio. I really only want things that have very little downside and a lot of upside. That's kind of the ideal investment. We don't want low risk, low return, or high risk, high return. We want low risk and high return, which is this, obscure balance, this sort of asymmetric risk return that we're all hunting for, really. But what I would say is the biggest reason by far that I don't just blindly clone and put ideas into my portfolio without diving deep and trying to understand them myself And that basically is this. Now, it is very easy to simply clone the ideas and clone the stocks that show up in an investor's portfolio and put them into your own, but it's very, very difficult to clone the conviction. So, in other words, if an investor has really taken a big swing at a new position and put, say, 20% of their portfolio into it, they clearly in that situation have a lot of conviction that this investment is going to work out very, very well. And although I can see this name of the stock, I can see the name of the company, and I could go out and buy it myself, I really can't copy that level of confidence in the investment by just looking at a 13F filing. That is simply something that is going to require more work, and if I'm going to put 10 or 20% plus of my net worth into one company, I really need to do the work to understand that business and get to the same level of conviction as that super investor that I'm following. And that means that if I do end up getting invested in one of those companies and the price shoots up or drops through the floor, I'm going to be much more comfortable holding that investment if it goes down, or maybe if something has fundamentally changed with the company, being able to understand the news that might have come out and make a good judgment call on what I should do with that particular investment. And if the price shoots up and I think it's now overvalued, I can understand that it is overvalued because I've done the work on it. Or maybe I think it's still got a long way to run and I can continue to hold on to the company, and I'm not kind of reliant on the next 13F filing with a 90-day delay to come out, which in some cases might mean I have to wait for 2 quarters or 2 13F filings, if some news has come out during that 90-day delay period. So you can clone the idea, but you can't clone the conviction, and that's really the main reason why I tend to be more of a selective cloner when it comes to my investments. So those are some of my thoughts when it comes to being a cloner in the stock market. I think there are a lot of situations in life where copying other people is probably not the best way to go about it. You'll get done for plagiarism and that sort of thing if you're at school or university. So definitely don't do that. But when it comes to investing, I think bowling with the rails up and being able to copy some of the ideas of the best investors on the planet is a very, very good way to go. And it's very likely to give you a nice head start over the average participant in the market. So I do hope you enjoyed the video. If you have any thoughts on cloning, I would love to hear them down in the comments below. But that's it for this one. If you did enjoy it, please hit like and hit subscribe, and I will see you in the next one. Cheers.